Hello, all, welcome back. Market is like beating us and like anything, right? So people are feeling market is going down, and the market mood index is right now in extreme fear condition. And I know right now at this point of time, everybody aware that whenever market goes down, we need to add more to that one. We should not get panic. This basic literature, this basic idea, I hope everybody started to have right now is what I'm feeling. And this is not a time to panic. This is the time to understand. This is the time to accumulate. When the market goes up, we all feel that we are not able to buy, or like if you will get a FOMO mode that I'm losing my opportunity, and whether it's a right all-time high, so whether it's okay to invest or not, right? Those kind of a feeling you'll get. Now market has gone down. See, always the technical indicator, right? It works better based on your past performance, right? Most of the time, like 90%, we'll always try to find out based on what was the previous high, and from high how much it has gone down. So now the market has already gone down by almost like 8%. Now you know, right? If the market recovers, you have a potential opportunity to gain another 78%, right? That is how you have to think. So that is what the market always like. This is how the market behavior works, and this is like a mind game. It try to manipulate you, or more than manipulate you, it's like try to bring participation to into the market, because when the market keep on going high, people will try to be quiet, try to feel that okay, market is going high, so it's not right time to buy, so let me hold my money. Everybody think in that way. So that is why this kind of a correction happens, so that everybody can participate in the market. So that is why it is called an opportunity. And always this extreme fear zone is where you have to be ready to add more. Hope this context sets clear. Let's get into the detail about today's video. I'll try to explain what is happening in the market and what can be expected, and how we can be prepared ourselves the next year or coming year. And also I'm going to discuss few couple of stocks so that you can look into, you can put it in a watch list. So let's get into the details. This is Sundar and you are watching Mindful Finance. Okay, so I'm the one right now you are looking at is the historical data of a Nifty returns in a month wise from the 2000 year to till now. Okay, what you can see is I have highlighted in the colors here. The deep red is the negative part. Wherever you see a deep negative, so this is the biggest correction. Okay, and the last column, the nth column, if you see, these are the average return for the year. Sorry, not average return. This is a total return for this particular year, and this is for the 2001. This is for 2002. Likewise, these are the returns for the end of the year, and the below 15.4 is the average return since 2000. Right now, you can see average return Nifty has given is 15.4. Okay, now comes the interesting part. Okay, just to analyze in depth about this kind of a thing. If you see 2000 and 2001, it is minus 14, minus 16, and then in the 2002 it became 3. And if you see in 2003, all this minus 14, minus 16, and 3, all this thing like 15, 30, then 45. This is supposed to be like you have got a 15% return here, right? You didn't get, but it's a minus 15. So if you would have received 15%, obviously you should have received 15, then 30, then 45% you should have received. And 45 plus 15, 60. So here, when you calculate, it should have been 60%. But if you see, it is 71.5%. All these returns you got in this 1 year, right? So somewhat the market will correct and come to that, try to get that average. So 15% is the average. So similarly, if you keep checking all the year, 10, 30, 50, see all these things are there, but suddenly you got minus 60% correction, and then 75. Similarly, you see 24% correction happen, and next year it got recovered. Then it is 6, then 31, then minus 4. It's slowly going on, because what happens is like you try to get that 15% average at the end of the thing. Okay, so in that case, if you see for the 2024, so till now our market has corrected for minus 7% in October month. So if you see total return we have received is 10%. So previously we got 19%, previously 4%. Assume that this 19%, the extra 4% was received from the we need to like keep adding that one, like past year, and find the gap. If we find that currently we are in a 10%, and if I put the calculation for you, so 5% is less for this year. Okay, so this year we need to get 5%, which is I think you are not able to see. Just look at this. So you need 5% still. You need to get for this year. So last year, like -4, 4% was extra, right? So that, see, last year it was 11%. So you're supposed to get 5%. So put this 4% over there. So 15% is tallied. So like that, you can tally it. So in that case, you see 5% still it's pending for this year. If you are not going to get this year, you will get this 5% next year. That is how you have to think. So think this as an opportunity. Don't think this is something like you are losing. So whatever amount it is going down, end of the day, you will get that back. Okay, and if you see the chart here, you can see earlier this was very much volatile. Till 2010 it was volatile because of the government instability and all those things. Now the government is stable, so you can see a stable average return, which is like 15% you are getting consistently. So the similar thing you can expect for next another 5 years. We can have an average return of 15%. It may go down. So this year, like I'll get into the technical details. So this year still we may go down, but end of the day the market will bounce back. Okay, let's get the technical chart of Nifty. Okay, I'll show the whatever we discussed now in the chart as well. So till now market has corrected from here to almost 8%. Market has corrected. Let's go to a monthly view or weekly view. Let me go to a monthly view. If you see this one, so I just try to mark it out. You see from here, which is year 2021 till year end of 2022 January, if you see the market moved 27% and see it corrected, and then you see the little bit of movement, that is like 3.47%. 27 plus 3.47, this is the next year, so 30%. From here to here, if you see market has recovered, given the 15% average here. And from here, if you see, it has moved 20.8% more than, which is 5% extra. So that is what the next year, which we are thinking is right now. The market is given you 11.59%. Previous year it was 20.8, which is 5% extra. So now tally that with this one. So you have to get 10% only for this year. Okay. So now till now the market has corrected 8%. So market has corrected 8%. So we can expect another 2 more percentage correction, which is I have marked down here. So this gap. So still the market can correct another 2 more percentage. Okay. Somewhere here. Okay. So this is the channel pattern it is following. So it may come into the channel, and this is the support. This is a this 3 candle, like this 3 green candles, right? The middle of this candle, this middle of this 3 candle. So till here, this is called 3 white soldiers. So the market may come till here, which is 23,600. Market may correct further till this one. So we just keep this expectation in your mind that market can correct further. So don't get panic. And if you get to the broader market like mid cap and small cap, all those things, if I check mid cap, so mid cap can fall another 1 or 2% from here. Okay, this is the support level. So further 2% may fall, or till here is 2.75%. So expect some more volatility in the market, but don't get panic. So we are going to discuss couple of stocks which you can further focus. So let's get into that. The first stock which we are going to discuss is a company named Thermax. So they manufacture boilers, all those the accessories related to electricity or manufacturing or furnaces, all those things they manufacture, and they are right now into sustainable energy sector, which is energy creation sector, like solar, water plant, water treatment plant, all those things they are trying to get into that. This is the first stock I'm trying to let you know that to consider or put it in a watch list, because I cannot recommend directly that to buy or sell kind of a thing, because I'm not a SEBI registered advisor. This is purely for education. So you do your own due diligence. You try to understand the concept, why I'm trying to pick this stock. What is the psychology behind that? What is the technical and fundamental behind that one? Try to understand. I'm trying to help you. Okay. Based on that, you go and do a background check and match with what I'm saying. If there is any discrepancy, we can have always a conversation and we can understand that one. So if you see both a technical way and a fundamental way, this company is doing good. So in the screener, you can go and I don't want to get more time to showing the fundamentals. You can go and check the fundamentals in the screener. Profit wise, it's very good. Sales is growing well. All those things are good. But since market is an all-time correction right now. So, but this is completely opposite to the market performance. So that way you can think that the beta, what do you call beta is, if Nifty moves 1%, your portfolio or your stock also moves 1%. If Nifty goes down by 1%, your stock also goes by 1%. So that is the beta value. If you check this beta value, so Nifty is minus 8%, but this guy is completely opposite. So that way it is showing a strong momentum and strong growth in this sector. So currently, if you see, it is in a breakout zone, and two things you can expect. Okay, so from here it can break out and show the momentum, or this is a triangle pattern like this. You can see a triangle pattern, and that's a flag and pole also. So two things are forming here. So flag and pole. So it may come down a bit. Okay, from here it may again come back and test this level, and then it try to break this triangle one. But already momentum is there. Okay, momentum is there, and it looks positive. But whenever this large candle happens, always the market will try to book a profit from that. So that is called a smart money concept. I don't want to get into more detail about the smart money, but that is the way it works. So it will try to book a profit for a certain time, and then again it will go up. So take this as a first one, Thermax. The second one is Gokul Refoils. Gokul Refoils are into edible oils and different types of oil-based one, castor oil, all those things. And right now they have got some kind of agreement to create another 32 types of oils. So they are commodity-based business and oil-based one. So there will be, it will be a cyclic nature. But consumer-based, we are not using the commodity in a cyclic way. We use regularly. So our demand is constant. Okay. Consumer side demand is constant, but the raw material wise, the demand might differ. So that's where the price fluctuation may happen. Their operating profit may affect a bit. So for that only they will play with the pricing power. So that's how the consumer demands are met. And the consumer staples and consumer good companies, they survive and they make more profit because they have their own power to increase or decrease their price. So that way, if you see quite a long time, it is consolidating. It's a triangle pattern. And we have discussed about the Bollinger Band pattern also. If you see, Bollinger pattern is like still it's in a horizontal way. So it looks sideways. So right time to accumulate and build a position over here. And it has a very good potential. If it breaks out from here, the first target itself will get 7%, and it has a very good potential. If you see the long term, long horizon, right? If you see this company can grow, and this is a cup and handle pattern, and like huge potential it has, right? It can go another 100, it can double your money. It can go 100% from here. So look for Gokul Refoils. Third one we are going to discuss is Aster. I have already mentioned about this stock earlier also. It's a very good company, and see this also completely behaving opposite to the Nifty behavior. You see, it is momentum is going up. So last time we learned couple of price action. You can see it has a gap up, and this is called hammer. There's a chance again it may come and test this level, fill this gap and may go. So check that for, but momentum shows very high. The weekly, the momentum is high. So weekly also high, daily also high. So this is the very long trend line. You can see this is a very long trend line. This was broken and it is trying to test this one. So it's not easy to break this trend line. So it will consolidate here further to break this trend line. If it breaks, and it has a very good potential to give you a good return of almost 20% for now, but in the long run, it will give you a very good return. Okay, so think about that. So this is Aster DM Healthcare. The next one which we are going to talk about is Aadhaar Housing Finance. This is also a very good company because these guys give a loan to middle class people and the lower class people. The loan amount could be like vary from 5 lakh to 60 lakh or 50 lakh kind of a loan, and mainly for housing based one. So because those kind of a target people are the one they are scared about paying their loan and should not get embarrassed in the society. So they'll make sure to pay their loans properly. Right. So that wise the company is sitting with the cash and very good position. There is no negativity around this company, and it can grow a multi-bagger for you. So right now it is trading at 419 rupees, and you can see it's in a momentum is building up. See, it's quite a long time. You can see it's building up, and you can, this is the 1, 2, 3. This is the first wave of your third wave. Okay, it has a good potential to go to 660. Okay, it has a very good potential because it's making higher high and higher lows. Okay, so just make sure, maybe you can, if you want to do a swing, make this as your stop loss, like 375 as your stop loss, and within this you can have a buy zone, and you can buy at any place in this zone, and you can go for it. So this looks a very prominent company. Okay, so next one we are going to check is Cello. I hope everybody uses a product of Cello at their home, like hot pack, all those things. So they are very, the profit wise, it's growing very good. The company is a cash-rich company. Similar to Stovecraft, we discussed once about Stovecraft, and right now it is growing like anything. So similarly, it also has a good potential to grow, and it is at support level, and it broken the channel line. So it may struggle to break. Okay, it may take some time now. It's not easy because this pattern has been broken now. So it has to come into the pattern again, and it will, when it comes to the pattern, then surely it will go to 30% from here. So this is another company I wanted to tell you. Keep it in your watch list. And see, if you see, it is in a oversold zone right now. Okay, it's in an oversold zone. So there is no momentum right now. It will take time. Okay, there needs to be some news should come up, or something has to build up. But till then, 1 or 2 units you can try to consider and accumulate in your portfolio. The next one I want to discuss is called Data Patterns. It's a very good growing company, and this is based on India defense system and innovation side, the ISRO part of it, all those, whatever the things happening around our India growth wise. So this company is a very important company in that way, because I don't want to get into the detail of what the company does and all those things, but basically this company is doing good with the finance also. The correction has almost like 41% corrected, because everybody felt that they're missing this stock initially. Now it has corrected 41%. It's good stock to accumulate. The higher high, higher low formation, and it is a long-term trend line. You can see it has just broken, and it is, see, this is the consolidation zone. It has to respect this consolidation zone. If it fall further, it may come till here. Okay, another 17% it can fall, but I don't think that much fall can happen, because this is the very good hammer candles are there, pin bar candles are there. So I hope this will recover. Just keep a watch on this one. The downtrend 5 wave is completed now, so it may go till the 4th wave, which is 2560. It may go till here and again come down, and then it will go. Okay, so keep this in your watch list. And apart from that, so I was telling about mid cap. So you can see the mid cap has corrected a lot, and there might be a little more correction. If you want to invest like in Nifty 100 index or junior Bs, you can consider now to accumulate. Hope you understood the concept here. What are the stocks I have tried to here? Let's just check the fundamentals, learn about the company, what they are doing. So I have taken a very simple company, not a complex companies to understand. So it will be easy for you to add a reason behind why this company you want to buy. Put a thought process, and also think how long your horizon is going to be. All the stocks you need to at least go for 1 year, because as I mentioned in the earlier thing, Nifty may correct for another 2%, but end of the day it has to go another 15% next year. So next year the market may grow more than this year. So that wise, these stocks will recover and will give a good potential for you, good profit for you. Hope you like this video. If you like it, please subscribe it, give a thumbs up, and don't forget to press the notification, and please share it with your friends and family. Thank you.